Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. I said 13 weeks ago how the two recent bearish patterns in this market, that is the two bearish shift pitchforks, the smaller August 2023 base one and the larger mid-June to early August 2023 base one, how their very active separation was going to rip each pattern to pieces and neither would come away from the action unscathed. What happened in late October last year with prices exiting both pitchforks, and the small August base pitchfork is no longer involved with the market. Interestingly, after the breakaways, the market started initially tracking down the outside and below the broken lower tine, currently at 16,580. A procedure I'd seen elsewhere in other markets and in other pitchforks. There had been some deviations lower to make a small sideways triangle, for example, over November and December last year. But overall, prices had tracked sideways to just under this broken lower tine until last week. 10 weeks ago, I said about this sideways movement of the market, and I quote, "I suspect this seeming sideways movement may not last, as coming in from above we have the declining short-medium moving average, currently at 16,455, which may well apply pressure on prices and cause an action or a reaction," end of quote. Well, in late January it did, and the market fiddled with the short-medium moving average and we had a reaction. The market made a reactionary move back down. I said about this 2 weeks ago, and I quote, "So, just think, if this is what the declining short-medium moving average can do, imagine what the next, more powerful, declining moving average might achieve. We now have the medium moving average, which is currently at 16,990, dropping towards the frame. The only issue is the market is creating some support just ahead of the 2021 low at 15,665, and I'm wondering if this will be enough to hold prices higher as the medium moving average moves towards the market," end of quote. Well, I was wrong. The market rose up through the lower tine and shot straight up through the declining medium moving average last week, highlighted on my daily chart in mauve, almost as if it wasn't there, and making a mockery of the supposed strength it might have. Indeed, prices now using the medium moving average along with the June 2021 low at 17,095 as a base support for a potential move higher. So what's next? Well, next overhead is the October 2019 high at 17,815 and the July 2022 low at 18,265. However, I've been contemplating what sort of pattern are we creating. My initial thoughts are to look at the early November 2023 to date action as a possible rounded bottom pattern. But the more I look at it, the less I like it. Instead, I have not marked this on the daily chart. Maybe I should look at the whole of the early August 2023 today action as a possible descending scallop pattern. Now, this has merit, but is very, very elongated, and that is a negative point. The main thing in its favor is a new pattern we're about to complete. So you see by Thursday this week, and that is a possible monthly key reversal. If prices close either over 16,620 or under 16,255, then we'll be on. Anything in between and would have the lesser outside month pattern. Right now I am looking at a possible monthly key reversal up by some considerable distance. And this is why I'm reserving opinion and judgment on this market until I see how February ends up. LME 3-month zinc. The big picture here is much the same as it was last year, with some limited skewing, I suppose. You see, we have two competing shift pitchforks. Here we have a late May to mid-August 2023 mildly bullish shift pitchfork, which is highlighted in bright red on my daily chart. The market is currently in between the middle tine above, currently 25.45, and most of the moving averages clustered around it, and now just underneath it, and that's between 24.58 to 24.90. And then we have the lower tine below, currently 23.80. This lower tine was initially breached in early February and broken soon thereafter, but repairs have been enacted. And last week saw prices move back up over the lower tine again, or should I say prices move back over the lower tine and the very interesting support at 23.97 again. Anyway, I'll speak more on this support later on. This segues into the second shift pitchfork, the larger, very large May to August 2022. That's right, a pattern that's a year and a half old. The May to August 2022 bearish shift pitchfork, which is highlighted in purple on my daily chart. In this one, we are between the upper time above, currently at 25.52, and the middle time below, well below, and off the bottom, my daily chart. This is the rub of the market. The upper time of the larger purple highlighted bearish shift pitchfork is now well within the smaller bright red bullish pitchfork. Indeed, they cross over on the unusual 29th of February this year. Though, as I said 2 weeks ago, and I quote, I anticipate we will likely have a move sooner than that, end of quote. I would now like to emphasize once again how this bearish shift pitchfork, which is now well over a year and a half old, I wish to emphasize how it's still working in the overall bigger picture to drive prices lower, despite moves upwards during 2023, including the monthly key reversal up we saw in December last year. One way or another, the times are being tested here. The question is whether the bright red bullish shift pitchfork will give way, and we see prices move down through the lower tine again, or will the bigger purple upper tine give way, and we have a whole new potential outlook on this market. As I've said during January and early February, we should know by the end of February, probably sooner, what's going to happen. I'd only add one other further postscript, and that is, after studying this daily chart further, I'm wondering whether we are in the last stages of forming a possible September 2023 to date very large triple top. The neckline for this pattern is at the previously mentioned very interesting congestion at 23.97, which is seeing the bright red lower tine still rapidly approaching from below. Hence, despite the break lower, I will still be closely appreciating what happens down at the 2400 level again. LME 3-month tin. There are multiple major patterns here visible on this daily chart. We had the late July to start of October 2023 bearish half hesitation, which did not live up to its fullest potential, as prices ran into two significant supports, stopping the decline. The first was, and still is, an obvious one. It is part of the series of congestion bands below, specifically between 23.850 to 24.155, and then between 22.895 and 23.555. I have spoken about these congestion bands numerous times, so they should be familiar. The second pattern utilizes the same unfulfilled bearish half hesitation as part of its structure, and that is the June to October 2023 head and shoulders pattern. It is by no means a great looking pattern, with the second shoulder having quite an extension on it, or the previously mentioned bearish half hesitation in other words. However, it had been good at defining the lower end of the recent market action with its neckline, currently at 21,190. Plus, there is an additional consideration to take into account here. It was the September 2023 to January 2024 downtrend, which, if we take this into account with the neckline, then the action since the late summertime last year becomes a bear channel. Recent action has seen the market push back up from the congestion bands below, and overall the moving average is up to highs not seen since early August last year. This emergence led me to the next, but barely just possible pattern here. A mid-October 2023 to January 2024 inverted head and shoulders pattern, with a dark blue highlighted neckline currently at 26,390. I said 3 weeks ago, and I quote, "You see, I'm not too happy about this reverse head and shoulders pattern. I see myself trying a little too hard to optimize this pattern to the information available. And whilst it looks okay-ish, I am still not happy about it, hence the moniker of a possible reverse head and shoulders pattern," end of quote. Now, I even went as far last 3 weeks ago of laying out some potentials above, which have since become targets. Thus, we have a primary target X in the 28,100 area, with a secondary hardest to reach target X1 up in the 28,895 area. Now, this brings me to another pattern, and one related to the reverse head and shoulders pattern, and that is a mid-October 2023 to date ascending wedge pattern. You can see this highlighted by two trend lines. The lower trend line, currently at 25,645, highlighted in bright red, and the neckline, currently at 26,390, highlighted in dark blue on my daily chart. Now this ascending wedge pattern, along with the reverse head and shoulders pattern, has given up some additional potential targets above, of a primary target X2 in the 28,360 area, and a secondary harder to reach target X3 up in the 29,600 area. Okay, so you may think that may be all, but there is a further final pattern that is developing and is related to the lower uptrend stroke lower trend line of the ascending wedge pattern. You see, it seems the ascending triangle wedge pattern, ascending wedge pattern, is morphing into another pattern, into a possible bull channel. A late December to date bull channel, currently 25,645 to 28,235. To help aid in seeing this pattern, I've highlighted the upper bull channel line in bright red, same as the lower bull channel line. Of all the patterns, I think this is the one to pay close attention to. It's still fairly young compared to the others, but it also has the potential, most potent of all of them. In the immediate term, watch what happens at the dark blue neckline and the lower bright red trend line, which incidentally has the rising short medium moving average, currently at 25,650, reinforcing it.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.